Okay, folks, here we are with the Zoopla UK House Price Property Index for December 2022. Now, the executive firm summary actually says house price growth ground to a standstill in Q4 in 2022, dragging the annual rate of house price inflation lower to plus 6.5%. Most regions registered small price falls in Q4 of 2022, and demand has rebounded to pre-pandemic levels in line with 2018 and 10% higher than 2019. It's going to be a slow start to Q1. Early buyers are focusing on flats that shift away from houses in response to higher borrowing costs and the hit to buying power. We expect demand, Zoopla, according to Zoopla, we expect demand to improve further in the coming months as mortgage rates continue to fall and would-be movers realise that large price falls are unlikely to materialise. I'll say that again. Mortgage rates will start to fall slightly because the lending and the swap rates in the city and in the finance world have actually got a lot cheaper. Therefore, mortgage rates will fall a wee bit. Also, these huge large price falls are unlikely to materialise as well, they're saying. So let's have a wee look at a graph and see where we are. Interestingly enough, Zoopla chose this time to use this graph, which was actually what I thought was quite interesting because they've now changed from their comparison against their 5-year average to compare against the pre-pandemic levels. So they're now looking at comparison against pre-pandemic levels from January 2017 to 2019 average, which is the black one there, versus the purple one, which is the January 2023 in comparison. Now you can see clearly there demand is still as good, if not better, than it was in the pre-pandemic levels for property. You could also see there the number of sales agreed is just about even Stevens with where it was before pre-pandemic levels. Flow of new supply is less than what it was in pre-pandemic levels. So therefore, which tells us there's a restriction in supply, which means that demand possibly is still there because the demand is a lot less than what it was pre-pandemic as well. So demand is a lot better. Supply is a lot more restricted than pre-pandemic levels. So it's still a really good market going forward. That's what it tells us straight away. It also tells us there as well, when we look at the stock of homes for sale, there's less properties for sale than there was before the pandemic. So that's a good comparison in terms of where we are, as I said. So that's actually really good. Let's look at a wee example of momentum then. So let's look at momentum. Momentum and price inflation falls away quickly. You can see here in comparison to the rest of the UK, house price growth stalls at the end of 2022. So you can see 21 versus December 22. And versus the Q4 22 annualized. So December 21, we can see we'll go straight for Scotland. December 21, the house price growth was a lot more in December 2021 than it was in December 2022. You can see that, but also annualized as well. It was still quite positive. It wasn't a drop in the Q4 annualized itself. So actually, really good number for Scotland, especially for Fife as well. As I said, we talked about Fife before, so things are actually looking quite stable here in terms of the Scottish market, in terms of the Fife market. When you look across the rest of the market, prices have actually dropped quite considerably year on year in some of the areas like the southwest and Wales, and then you can obviously see Northern Ireland as well as dropped quite dramatically in comparison to the price rise in 2021 versus 2022. So you can see that as well. So demand rebounds in line with pre-pandemic years, Zoopla is actually saying as well. So we'll just jump onto buyer demand and we'll look at that. So the start of 2023 is a slow burner. You can see there now, if you can see, hopefully, you can see that faint line is 2018 at the bottom there. 2019 is just above it. 2020 is that line just here, going back and forward. That's that big drop in 2020. 21 is just above it, and the black line, the other line here, and the black line is 2022 coming down in comparison. So what does this tell us? Start of 2023 will be more of a slow burner in recent years in the proportion of households hoping to move in the coming year. And we'll be waiting to see whether house prices start to fall more quickly in Q1, as well as how much further mortgage rates are likely to fall back. Mortgage rates for new business are now generally below 5%, look set to remain in 4 to 5% region in 2023, which is much better prospects than the 6 to 6.5% levels at the end of last year. But buyers will remain cautious in the next few weeks. As the outlook becomes clearer after Easter, we believe, this is according to Zoopla, that demand is likely to pick up further. How much depends on the economic outlook and the strength of the labour market, as well as the trajectory of consumer price inflation and what this means for interest rates overall. More supply boosts choice and reduces price and pressures. The notable change in the recent months has been the continued growth in the number of homes for sale. A scarcity of supply has been a key feature of the market in 2022, adding to the upward pressure on the home values. Now it's reversing. Although the number of homes for sale remains 6% below the 5-year average. So it's still 6% below the 5-year average, the number of homes for sale. So it's still actually lack of supply, so to speak. So there is now an average of 23 homes for sale per estate agent, up from the low of 14 homes in early 2022. Let's jump on to the next graph and let's see what their thoughts on this are as well. Overall, here it is here. So this is the early 2023 buyers shifting preferences towards flats. You can actually see there. I did say it, flats. We're going to see their day now as buyers move towards them. One clear trend in the first few weeks of 2023 is that buyers are becoming more value conscious in response to the hit to buying power from the higher mortgage rates. We have seen a clear shift in demand towards flats and a decline in buyers towards the 3-bedroom houses. This is what Zoopla is saying. Remember, this is overall in the UK. Our data reveals that 27% of the new buyers are looking for 1 and 2-bedroom flats, up from 22% a year ago. In contrast to the demand for 3-bedroom houses has fallen 5 percentage points to 39%, although they are still the most in demand of houses across the UK. This is a trend that Zoopla see coming across all the areas in the UK in the first few weeks of the year. In London, 1 and 2-bedroom flats accounted for 49% of demand, up from 42% a year ago. This is all part of the shift back towards cities and the better value for money homes in accessible and more affordable suburbs, as Zoopla reported last month. It also reflects the fact that a proportion of existing homeowners may well be holding back until the outlook becomes clearer. And Zoopla expect to see the continued demand for first-time buyers looking to secure their first home and escape the rapid growth in rents. And that is supposedly supposed to be coming through in Scotland, with the ADS increased to 6%, or that's what the Scottish Government hopes is going to happen. There's no clear consensus. They've not actually got any findings behind that to represent that or back that up, but they think, on a wing and a prayer, that increasing ADS, the additional dwelling supplement for second homeowners, from 4 to 6% will put second homeowners off and therefore leave the door open for first-time buyers. What they don't realise is local authorities are actually competing against first-time buyers as well, as they are buying up empty homes from estate agents like ourselves to use for their social rented stock. So the local authorities are actually competing against first-time buyers in Scotland as we speak. They have been doing it for a number of years. I think that needs to be pointed out. So that's something that needs to be resolved as well. That could probably only be resolved with the advent of building more affordable and social homes in Scotland, and they've still to get that sorted. They've had 10 years at it, but they've still to try and sort that out, how they're going to do that. Okay, so let's look at it by area, and then we can talk about the outlook. And we can look at it by area. Here's the area itself. You can just zoom in there, and we can see right across Scotland, 5.1% according to Zoopla increase. You have Northern Ireland 5.7, North West, South, East Midlands 8, London 3.4. London is the least growth area, but you can see Aberdeen. That's the Aberdeen city centre, minus 0.4%. And that's actually quite good for Aberdeen city centre, because that was dropping quite dramatically. So it seems to be stabilising and without a huge reduction. Glasgow 3.8%, Edinburgh 3.5% in terms of price increases year on year, according to Zoopla's website, remember. Just pop on to the next one and we can see that average price in Glasgow 142,000, Edinburgh 267,000, London 526,000, Aberdeen 140,000. Fife's average price is round about the 175,000 mark. So what is the outlook overall for this, according to the Zoopla? Well, it's early days to get a clear record, a clear read of the market and outlook in 2023. The economic outlook has improved slightly since recent weeks, but the squeeze on household disposable incomes is very real with a direct impact on sales activity. And then that means the number of transactions going through. That said, the pressure on incomes combined with the cost of running homes is likely to drive a certain amount of movement in the market in 2023. Sizable amounts of embedded equity in many millions of homes may also encourage more movement and down trading to release equity to cut the energy bills and support the home moves in 2023. The latest value of housing report found that the total value of homes in the UK is over £10.5 trillion, with a circa 1.6 trillion of mortgage value. There's almost 8 trillion in housing equity in the UK. So even if there's any housing crash, there's not going to be a problem with the bank's liquidity, because 1.6 trillion in mortgages versus 10.5 trillion in house values. That is a loan to value of around about 20%. So even if the market drops 20%, we've still got 80% versus 20% in terms of mortgages. There's no way the banks are going to suffer liquidity if we had, for example, a crash like the credit crunch again. In the short term, Zoopla expects a further low single-digit price falls in the first half of 2023, but the housing market is in better shape to deal with the headwinds that in previous economic cycles, just like I've spoken about just now. So hopefully that's given you an insight into where the Zoopla sees the market right now. I kind of agree. I still think the Fife property market is quite buoyant. I'm going to talk about that more in regional areas, in terms of Cooper, in terms of East Neuk, in terms of Levenmouth, tomorrow in my show at 3 o'clock. So until then, I'm Jim Parker for Fife Properties TV. Bye-bye for now.